Hey everybody, Rob Maurer here. Happy Friday. Today we are going to be talking about what's happening in the charging industry as the dominoes continue to fall with more companies hopping on board the NACS charging standard, which I guess is redundant. But anyway, we've also got updates out of China, news on FSD Beta, and more. All right, looking at the stock, another great day for Tesla, unsurprising after the after-hours session yesterday, but Tesla up 4.1% today to close at $244.40, while the NASDAQ up just 16 100ths of a percent on the day. So as we have been talking about for the last couple of days, the streak continues. This is now tied for the longest streak of green days, positive finishes in a row for Tesla stock. Tesla now 11 days in a row finishing in positive territory, up 34% over that period. So the last time it was 37%. We've had other runs that have been more significant in terms of percent changes, but this is the longest streak so far, and it's still intact. So we'll see if this carries through to next week, which is obviously going to be a busy one as well, which we'll talk about a little bit more towards the end of the episode. All right, so just a couple of things on the stock as well. So Dan Ives of Wedbush, they have increased their price target today from $215 all the way up to $300 per share, so a pretty significant increase there. Reiterating the outperform rating, they say that as the sum of the parts story for Tesla now further comes into play with its supercharger network, energy business, AI-driven autonomous path, unmatched battery ecosystem, and increased scale, those are driving the reasons for the increase. So I agree with that. I think the sentiment is probably the more important part of this. There's a lot of positive sentiment right now on Tesla on a lot of these things that has sort of been missing for, that period of time where we were not faring as well in the stock. So I think, as we talk about a lot of the time, it is a voting machine in the short term. And right now sentiment, obviously for the last 11 days at least, has been quite positive. Hopefully that'll continue. Piper Sandler, Alex Potter, out with a note today as well, just talking about the partnerships here. Also, noting the sentiment driver that this is, charging partnerships with Ford and GM established dominance, which I think is very much true, and we'll talk a little bit more about that in a second. But Potter's take is that this won't have a significant impact on profit and loss, largely because of Tesla's company-wide revenue growing so quickly in other areas. That even though this does become a significant portion of revenue relative to the rest of the business, it's not all that big. So we'll probably talk more about that in other episodes. I think there's more discussion to be had on how this shapes up. We'll touch on it a little bit today, but I wanted to share that as well from Alex Potter. All right, looking at charging. So obviously yesterday we talked about the huge announcement from GM following Ford's announcement that they're going to be on the North American charging standard. Today we've got a couple of updates from charging companies. First here, Flow, they've got about 90,000 chargers. They are going to be adding North American charging standard as well. Basically just saying that, as customers demand this, they will continue to, or they will add these going forward. So I'm not super familiar with them as a Tesla owner. Thankfully, I don't have to mess around with third-party charging too much, actually really at all, except for really apartment charging. But obviously, we continue to see, charging companies, automakers, start to adopt this, and I think this is going to happen now pretty quickly as this, more and more people come on board. So ABB North America, again, one that I'm not super familiar with here, but they are also going to be adding the North American charging standard. And then Blink tweeted today, they're a little bit more well-known, I think, that they are going, I guess they didn't say that they're going to be, but they say that they welcome all moves to increase EV adoption. So I'm not sure if that means that they're going to do it or if they're just saying like, hey, this is fine with us. But I'm sure at some point they'll probably jump on board as well. So kind of interesting to see that update from them. But again, a couple of the companies already just the day after the GM announcement jumping on board, and I think that will continue here probably over the next few weeks. Now, the White House chimed in today as obviously NACS gains hold. There is federal funding up for grabs for charging infrastructure. We haven't talked a ton about that because Tesla hasn't been necessarily eligible for that or seemingly not extremely interested in it. There have been some opportunities where they could have applied for things and they've foregone those things. So it's not something we spend a ton of time on, but there is a lot of capital here that could be accessed. But the White House chiming in again saying that Tesla could be eligible as long as they include CCS connectors. I think that there are also some other stipulations in there having to do with sort of the payment processing and how that's handled. If I remember correctly, there might be some language in there that has to do with having to display certain rates on a physical pedestal at the charger or something like that. So we should probably spend a little bit more time looking into this now that the NACS is gaining more traction. But if that sort of does become truly the North American charging standard, it's disappointing that this sort of legislation, this sort of funding would sort of pigeonhole charging funding to also have to include CCS, which could very quickly become an outdated form of connector here in the United States. And then all of that infrastructure is, essentially going to go to waste. Obviously can support sort of these legacy vehicles, but that's going to be a very small percentage of the total if we go just forward a few years and everyone has adopted NACS. So hopefully there's at least some willingness to kind of reevaluate this as time goes by. Again, if we see this sort of waterfall or domino effect continue, then this is something that really should be reevaluated so that the government's not really, getting in its own way here, getting in the way of these companies as they work towards the standard. So we'll see on that, but right now that is the stance, which isn't anything different. It's just a reiteration of how things have been. So beginning of the end of CCS, obviously it's going to be more of a standard in Europe. That will probably remain the case. It would be awesome if this was worldwide. I think there are some things with DC versus AC, three-phase, etc. on how that's actually going to play out there. But Elon did say that they tried very hard to convince the European Union to adopt the NACS, but as you said before, a committee had already decided on that standard, so it is kind of where it is. I doubt that changes, but we'll see. But probably the more interesting part of this tweet, or the part of this tweet that has gotten more attention, Elon saying, worth mentioning that Tesla is supplying the adapter and other hardware to car companies at zero profit. So obviously Tesla investors, you don't love seeing that. We've talked about how this advances Tesla's obviously charging standard, which should be good for the supercharger network as a whole, which a lot of people I think are kind of overlooking in general because they sort of, I think they seem to misremember that Elon had once said that service wouldn't be a profit center for Tesla, but I don't recall comments of the same variety of the supercharger network. And if they have, those have been superseded now by more recent comments. So this was back in April last year, about a year ago. Elon said that for the supercharger network, this is kind of when we're in the process of opening things up to the third-party supercharging. Elon said we're aiming for 30% gross margin or about 10% profitability, all costs included. So when you think about the moves here, both with opening up to third parties, now having other companies start to integrate the North American charging standard, even if Tesla is supplying the adapter, other hardware to actually make vehicles capable of charging on superchargers, they're still going to potentially benefit from the marginal cost that these vehicles have from charging. And going back to Alex Potter's note, that's kind of what he's saying is potentially a little bit small relative to the rest of the opportunities for revenue in Tesla's business. But again, that's up for debate depending on how you model it, and I'm sure there will be a lot of conversations going forward about that. Now, the other thing here that Elon didn't specifically mention that we've talked about is API access, which it does sound like these companies, GM and Ford, are going to be relying on Tesla for. There could be some sort of fee for that access. And I think in Ford's announcement, they even talked about integrating Tesla's sort of planning system into at least, routing via superchargers into their navigation system, which also could be another opportunity for some sort of fee while still allowing, these companies to access the network in sort of a non-monopolistic way, which I think Elon is pointing out here. There are still plenty of opportunities to, still capitalize on the network that Tesla has from that extent. So it's important to consider those other things. And then obviously, it's probably good to have these other EVs constantly plugging into Tesla stations and a lot of marketing opportunities around that as well. So just wanted to reiterate that, Elon's most recent thoughts on kind of how that would be structured. So we'll move on from charging for now, but a lot more to continue to talk about on that front. All right, next we've got an updated drone video from Woowa. I don't know if the GPS jammers that he had talked about before not working or if he's just at a distance here, but it looks like, as we can barely see here, even though this is 4K, we can see what seems to be probably a Model 3 out here testing. If we zoom in and not enhance, but we can say we enhance, we can see that the front of the vehicle does look covered here, so very similar to the Highland prototypes that we have seen in testing here near Fremont. So my best guess is that this is probably a Highland vehicle that was produced at Shanghai that is out there testing after production. Did a couple of laps, nothing major to see from the video outside of the frame that we're looking at here, but To me, it does look like it's covered, and that would probably be my best guess for what's going on there. So we've also seen in the last couple of weeks a lot more sightings of Highland vehicles in Fremont, so hopefully things are going well with that. Also out of China, we've got updated retail, export, wholesale sales figures broken down by model. Obviously, previously we had the total. That was kind of it. Comes in waves. Now we've got the detailed level, as well as production. So we'll start off with retail sales, 42,500. So pretty much on track with insured vehicle numbers, maybe a little bit lower than what I would have guessed based on the insured vehicle numbers, but definitely within that ballpark. And then 35,000 exports, pretty much the same as last month in both of those categories, which not surprising, again, based on the insured vehicle numbers. And then you can see the split of production here, about 78,500 vehicles produced. So even though May does have one additional day over April, remember in the beginning of May, there were probably 3 or 4 days there where production was halted for the holiday at the beginning of May in China. So with that knowledge, basically production rate looks like it was pretty consistent with April, which relatively close to the high production rates that we have seen from Tesla. Maybe a little bit lower, but not anything too crazy. So seems like a pretty solid number. As we head into June, we're again probably running into a same sort of a situation where there is probably some production downtime with these Highland rumors. Now the spread between sales and production, only about 760 vehicles. So pretty close to both of those. Not any significant build in inventory, just a little bit for Model Y, it looks like. So the other column that I have, the header covered up here with my video, you can see 159,000. So this is the trailing 3 months retail sales. So just China sales specifically over the last 3 months. As we had talked about before, this was building up to a place that was probably going to be a record once we got the May sales. Now that we have the May sales, this is a new record for a 3-month period for domestic or retail sales in China with 159,000 vehicles from March to May. So obviously this is boosted by the price cuts from a revenue perspective, probably a much higher number here when they did 157,000 back in Q4. But again, that was a little bit of an outlier and dropped off pretty significantly when they had that production downtime then at the end of the year. So hopefully this is a number that can kind of continue around this level if we see another big month here for June, again, pending the Highland stuff. But really nice to see some strength in unit sales after the price cuts in Q1. So I think good to see that. And again, the last couple of months, this is probably, I think, the 3rd highest, and then, obviously the 1st highest here. So a little bit more consistency in those high numbers than what we saw in that peak back in November. So good to see that on a 3-month basis, which I think is probably the best way to evaluate it, just because of all the fluctuations due to what Tesla does from an allocation perspective, whether that's going to be exported or go to domestic sales. So we'll see how the quarter shakes out, but good to see some strength there over that 3-month period. All right, last couple of things here. So FSD 11.4.3 is rolling out. The release notes are the exact same as 4.2, but sometimes we see pretty significant updates or improvements with those versions that don't actually have any additional release notes, as Tesla kind of smooths out little things with those new version numbers. So I don't know if this is going to just employees at this point or if this has started to more broadly roll out. But Elon did reply to this from Tesla near Silicon Valley saying that the rate of improvement is accelerating. So hopefully, I think it feels like that since version 11 has come out. I think there was a lot of behind the scenes work going into version 11, so kind of hard to see if the progress they're making is just more public now or if the rate of improvement is really accelerating. But hopefully that's the case. If that's the case, that would be, really exciting for FSD as the scope of what FSD is doing has definitely grown over the last few months. And then we've got a report out of San Francisco today that Tesla has signed a new lease for a 210,000 square foot advanced manufacturing facility in Fremont. And apparently, one source who had knowledge of this lease said that this is going to be used to support production of Tesla's 4680 battery cells. So supporting production doesn't necessarily mean that it'll be production of 4680s there. It could mean that, doesn't necessarily mean it, but we'll see. Obviously a pretty significant size space there for Tesla in Fremont, and hopefully allows them to make progress on 4680s. And then last thing for today, just a quick look at the calendar for next week. As we've talked about a couple of times, it's going to be a big week. We've got the CPI Consumer Price Index report on Tuesday morning before market open. Then on Wednesday morning before market open, the PPI or producer price index. And then midday on Wednesday, FOMC meeting and interest rate decision. So obviously going into this, we'll see. I haven't checked the expectations. We'll probably talk about that on Monday in terms of the FedWatch tool. But obviously, two major reports, FOMC meeting. It's going to be pretty chaotic a couple of days there. So buckle up for that. But that'll wrap it up for today and for the week. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you on Monday for the June 12th episode of Tesla Daily. Thank you.